I believe and I know that we can use our money in a way that makes a difference. And you can tell when you invest in a syndication, when you invest in these deals, you know where your money is going. That's the difference, right? And with us, we're buying ugly stuff and we're changing it and making it clean and safe and positive place for people to live. And it's still affordable. We're not turning it into $1 million little condos. We're turning it into, homes that people can live in and raise their kids.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Sam Sells is a retired U.S. Air Force officer and combat veteran who founded Wild Mountain Capital in 2018 with his, as he says it, hero dad. Sam, welcome to the show.
Hey, thanks for having me, Sam. I love the name and super happy to be here.
Absolutely. You got a great first name as well. Certainly appreciate that. It's great to have two people with the same name on the show. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now? And how did you get there?
Yeah, we started in 2018. I was still active duty Air Force, trying to find a way to continue my impact on the world. And started out with mobile home parks, trying to take really distressed mobile home parks and creating nice, safe, clean places to live. We did that. We found out that you can make money doing that, and a lot of it. And so we continued buying mobile home parks, about 8 more parks that year in 2019. So at the end of 2019, we had bought 10 properties that first year, about killed myself. And then just with the amount of work we were doing, slowed down that next year, only bought 1 more property the following year. And then after that, we bought another 10 properties, this time apartment complexes. And we did a storage development, ground up development that we purchased and turned over. So now we're sitting at 20 properties and we're in exit mode to a certain degree. So we have properties selling right now that we've finished our business plans on, or got to a point where we could not finish the business plan due to COVID restrictions. But we are cruising, and it's been a fantastic journey.
Okay, so you decide in 2018, look, we're going to get into commercial real estate. Let's go close 10 mobile home parks.
Yeah, so we just decided that my dad doesn't have a retirement. I'm coming out of Air Force retirement. Yeah, I can make money and go live in Puerto Rico and probably live just fine, but I love my family and I still want to make a difference in the world. And so we were trying to figure out how can we make money and make a difference. And we had $0. So I had $30,000 in a Roth IRA TSP, and my dad had 80 grand. That was his entire retirement. Wow. And we put those together and we bought 2 mobile home parks. We turned that 80 grand somehow into $170,000. Credit cards may have been involved, so as refinancing my car. But we did it, a couple lines of credit, and we bought these 2 properties, and we made money, and we started making like $10,000 a month in passive income. And we were like, this is crazy. Right. We've got something here. And we've totally cleaned up this mobile home park. People loved us. Crime dropped significantly. Occupancy skyrocketed, payments on time. And it just was such a nice thing to see. No more trash, no more other stuff. And then we just this is it. Now, how do we do it? And so I started finding out about syndication. How do you raise money? SEC rules and regulations. I absorbed everything I possibly could about it and went out there and started doing it. And that's when I've never raised a single dollar from anybody. And somehow I raised like $2 million that first year.
Wow. Okay. What did you do to inspire confidence in your investors? Like, hey, my name's Sam. I bought a couple parks. We are making money on it. But by the way, now we're going gangbusters and buying stuff left and right. Get in because it's going to be great. Like, how did you sell that?
Yeah. So, I had started flipping single family homes in the early 2000s. We made it through the 2008 crisis because we were flipping, right? And we were buying really distressed properties in good locations. And when the market crashed, guess what? I paid $50,000 for this house. I spent 25 grand. on the rehab. I'm selling it at $130,000 because houses were cheap back then, right, even at the pinnacle. And the market crashed, and all of a sudden, I had two homes. I remember it closing in 2007, December 2007. Both of them fell apart because the markets were just ripping apart. And we ended up reducing the price on one from 130 down to 120. And I still made a bunch of money, right? And then the other one, we turned into a long-term rental, held on to that thing for 7 years, refinanced it probably 4 times and pulled cash out over those 10 or 12 years. Made a ton of money off that little house in the middle of San Antonio, and then sold it and used the cash from that to buy an apartment complex later on, a couple of years ago.
Got it, man. That's that's great. I guess the when you start raising money from investors, what was the thing, I guess, that you feel like you did well that inspired confidence in the people investing with you?
Yeah, so great question, and you asked this before. One was, having a track record of success. It wasn't our first time, and in the Air Force, I've been traveling around the world. I've been working with foreign militaries, foreign governments, doing everything from building clinics in Africa, like ground up engineering, construction, the whole thing, right? Which is a totally different world, right? To Asia, helping them develop systems and working in their hospitals to, hey, do this, do that, and how do you guys like to do this? Building these sustainable systems that when I leave, that they continue. I'm Not the Ugly American, great book if you ever read that, but understanding how to work with others. Right. And at the time when I started raising, I was responsible for a $68 million rehab on a 500-bed hospital, a massive project. And I was the project lead, reporting to the bigwigs. And so I had a ton of project experience. I had a ton of team experience. I spent a lot of time social and Air Force Special Operations doing stuff and being able to combine teams and really smart people to accomplish a great task. And that conveyed well to folks. Plus, we had just proved the model. We could show them, here's the financials. This is what's happening. We flipped a bunch of properties before. Essentially, what we're doing is flipping, except we're holding on to them and keeping the cash flow. So buy low, rehab, create a difference, make an impact. And here's the actual dollars that we make.
Right. Okay. No, that gives a lot more color to it. Thank you for that. I mean, I think leveraging your background is so important in this. And it may not necessarily be that you have owned a dozen mobile home parks, but yet you've got the requisite experience that when you do take one down, it's not a brand new experience for you.
Right. That's it. And we learned a ton, and we've made a ton of mistakes. Now I know better. Like if I could go back to my old self, one, I would slap myself in the face like, Sam, what are you doing? Do it this way. It's so much better. And two is like, go find a mentor or a coach. And I tried to find a mentor 2018 and early 2019. I could not find a mentor who didn't want to charge me $35,000 to even talk to me. Right. And so now, I offer coaching at a very, very reasonable price. And it's like, hey, let's chart your own course and see how you're going to get there. And then don't do this, don't do that. I mean, if you want to do it and learn the hard way, fine. That's on you. But I'm telling you, don't do those things because that's going to cost you $150,000 that you're never going to get back. So don't do that.
Yeah, don't do that. Don't do $150,000 mistakes. There's your piece of advice. What are a couple of those things that come to mind initially that you say, man, those were some hard lessons we learned?
Yeah. So twice this has happened to me, both, some time ago is allowing people who are supposed experts in the field or in a location convince me that something's worth more than I know it is. Right. So once we pay too much for a property, way too much for a property. Fortunately, there was no investors in that deal, but we did it as a favor to a person who had invested a lot with us. And it turned out that it was not at all what they said it was. And I lost money on that deal. I'm not afraid to say that I lost money on that deal. If you're investing with somebody who's never lost money in any deal, either one, they're not telling you the truth, or two, they just haven't been around long enough. Because real estate, if you spend too much money, you're going to lose money. so you make your money when you buy, particularly in value add. And in this case, it was a place that was outside of our expertise, and we listened to him and we paid too much. Right. And so the other time was, same thing, brokers, property managers, this, and this. And we went into the deal. We did our due diligence. It came back that this was not at all what was being advertised. And we had gone into the deal, and I kept saying, look, if we're going to go into this, I know this is going to be an issue. This is going to be an issue, and we've got to make sure we get our earnest money back. And I allowed them to talk me into signing a contract where we didn't get our earnest money back. And sure enough, we get in there, we do the due diligence, and the structure had so many issues, well over $1 million worth of structural issues. And I could see them when we were walking there. And, we walked away from that deal. I'm glad we didn't buy it. Somebody else bought that deal. Good luck. I hope they did the due diligence they were supposed to. Because we hired engineers to go there, because I've been in construction long enough. I've built enough things. If the foundation's falling apart and there's mold up in there and there's water underneath the buildings, you're just a recipe for disaster. So somebody else's disaster, sorry, good luck to them. Another syndicator bought that property. It's really pretty on the outside.
It sounds like you lost your earnest money on that deal.
We lost our earnest money. We fought and got a bit of it back because it was so far from what they were telling us, the sellers and everything else. And they just refused to work with us. They weren't local. They were out of state. And so, hey, look, I would have been embarrassed as a seller if you came to me and said, look at all these issues. I would have been embarrassed, and I would have worked for them. Nope.
Got it.
They weren't friendly.
Those are the painful lessons when you go, my gosh, my earnest money, there it goes. I could have had more fun just lighting a pile of money on fire and watching it burn.
Yeah. And watching it burn, right? I should have bought new toilet seats for half of America with that $150,000, right? That'd have been better.
Right.
Just throwing it down the drain. Absolutely.
Tell me, when did you transition from mobile home parks into apartment communities, and why?
So in 2020, with all of the, COVID happened and everything slowed down. One of the things that happened was a supply chain for mobile homes, brand new mobile homes, got stuck really, really bad. And so we had ordered a bunch of homes, and we just kept waiting and waiting and waiting. And they were creating homes, but they were only building homes for the biggest mobile home park operators who were buying hundreds of homes at a time. And they weren't, even though we were way in front of them in the stack, we were too small, right? It's like, well, we want to buy 100 homes, but you got to deliver the first 20 or we're not doing anything with you guys.
Sure.
And so that process killed us. And so we had bought these properties, we'd done a bunch of renovations, but we had bought property with the intent to bring in all these new homes. Right. And the prices were skyrocketing, and debt on mobile home parks became incredibly difficult. We had 6 refinances fall through with COVID and everything else. The market stopped. All of our refinances just died, and our lenders like, well, we'll do apartments. We're not going to do mobile home parks anymore. And so we shifted in 2021 or the end of 2020 with buying apartment complexes. We bought one. We saw a really good turn on that one. 4 months later, we bought another one, and it just kind of snowballed, and we bought 8 apartment complexes that year and 2 other properties. One of them was the property I shouldn't have bought.
That's amazing. And in that, you also transitioned and said, hey, you know what? I think we can do a self-storage development.
We actually bought that in 2020, the storage development. It was right next door to an mobile home park. It was in Alaska. I was living in Alaska at the time. You had this huge space where there was no storage. It was right along the highway. And it was just an ideal location. A guy had bought it, had developed it into storage, like the ground and everything. And then his wife had gotten really sick. They moved out of Alaska. In Alaska, you really need to be present. Yeah. You've got to understand that market is completely different. You're not going to gain appreciation. If anyone comes and says, oh, we're going to get 2% per year appreciation, you're like, wrong, that's not going to happen. Cash flow is going to be great. And so you're going to buy for cash flow 100%. And so we we built this whole complex. We moved. I found another operator there who was local and could take over, and he's been doing a bang up job at getting that place filled.
Got it, man. That's a lot of moving pieces, a lot of acquisitions in even a few different asset classes in a very short period of time. And it sounds like you found a way to efficiently scale into all of them. What have been, or what advice, or what has been some of the keys you would say that you have used in order to do that?
So mentorship, coaching is vital. Finding somebody who can help you. Like mobile home parks, the way that you create wealth in mobile home parks or create a difference, it's very different. The numbers are different. Financing's different. Sourcing equity, debt, the capital stack is different than it is in apartment complexes. Storage in general has really small returns now because there's just so many entities in storage, and the gravy train has ended. You can still find these little ones that are doing good, but mostly the gravy train's ended, right? And so you need it to be a giant operator. And if you love storage, you really want to do storage, you can make money in storage. It's just super, super difficult at a starting point. Mobile home parks, you can start, but you need to be present. You've got to be close to that place or it's going to be a disaster. Apartments is the easiest place to scale. It's the easiest place to secure debt. It's the easiest place to secure equity. It's the easiest place to transition from buying $500,000 property to buying a $10 million property. Debt gets easier as you get bigger.
That's really, really intriguing. So you guys have gone, you guys are still going long in apartments right now, or as you said in the beginning of the show, you guys are more into the disposition side of your business?
Yeah, so we're in the disposition side of our mobile home parks. We're selling off 8 of the 10 mobile home parks. We're really focusing on some markets in Texas and Oklahoma. Oklahoma gets overlooked all the time, but cash flow there is great. And so it's like, why would you overlook this place? College towns, Tulsa, Oklahoma City, Stillwater. You got these places where they're Norman, Oklahoma, just financial little gems that people overlook all the time. And so we love those markets. But our focus really is Dallas, Fort Worth. That's where we're buying right now. And one of the things that we've also transitioned, and very few syndicators ever make this transition, is to move into working with institutional partners. We closed our last deal with an institutional partner. What that is, it's not a syndication. It's like the next level up. It's more complicated. It's more sophisticated. You've got to be able to operate at a certain level. And they're going to get all up in your gravy train. If you've been through the military and you've entered MEPS, you know what I'm talking about. And I'll be polite here on the show, but there's a certain amount of sniffing that goes on and underwriting of you as a sponsor. I mean, they listen to all my podcasts. Poor guys. Why did you listen to my podcast? I mean, I think they're wonderful. My guests are fantastic. I'm an idiot. Don't listen to me. Listen to these other people who are smart. But that model dramatically changes how your money operates. And so just from that single deal, we'll owe more than 12x our money with our partners, institutional partners. We can help other people know how to do that. We can help place equity with them. Everybody talks about family offices. Family offices are wonderful, but they're finicky. You need to have a great relationship, and they promise you the world and they never, ever deliver. Or I'm sure they do. They're just super difficult to get them to deliver. Institutions will deliver if you meet their criteria and the deal meets the criteria.
I would love to have you come back on another episode and we talk specifically about that, because there's so much nuance, I'm sure, into getting your first institutional capital partner to come on board and take down deals. I bet we could have a conversation that would go on quite for a long time as you
absolutely
insight on that. That's absolutely cool. Sam, thanks for taking the time to come on the show today. I did have one, maybe if you got 30 seconds, maybe about 30-second snippet here. If you can tell us what you mean when you say that you guys are creating wealth by making a difference.
We have this concept of clean money. Whenever you get your money, you invest. Let's say you buy Bitcoin. Where did that Bitcoin get produced, right? Mafias, these big drug cartels, they love Bitcoin because they can produce it, they can mine it, they can sell it. It gets become cash to them, and then they can use that cash to order a hit on a family that they don't like, right? And so, did you just buy Bitcoin from a cartel who mined it, and now is using your money to kill people? And you have no idea. You have no idea that your clean, hard-earned money that you invested just got used for nefarious purposes. I believe and I know that we can use our money in a way that makes a difference, and you can tell. When you invest in a syndication, when you invest in these deals, you know where your money is going. That's the difference, right? And with us, we're buying ugly stuff and we're changing it and making it clean and safe and positive place for people to live, and it's still affordable. We're not turning it into $1 million little condos. We're turning it into, homes that people can live in and raise their kids.
That's awesome. Absolutely love it. Sam, thanks for taking the time to come on the show today. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, you can find me on Instagram at Clean Money Sam. You can find me on LinkedIn, Samuel Sells, Facebook. Please reach out to me. You can also send me an email, sam@wildmountaincapital.com. And would love to talk to you about what we do. If you want to co-sponsor, you want to learn more about institutional and how to change or move into that space, or how to go from just raising capital to doing your own deals and being the lead sponsor, we're happy to have that discussion and help you make those transitions.
Fantastic. Thanks again, Sam. Appreciate it. Have a great rest of your day.
Thanks, Sam. Appreciate it.